Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, April 9th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to look at is a weekly candlestick chart of the S&P 500 that really just focuses on the last 7 weeks of trading. Wanted you guys to really see what has happened over the last month and a half or so of trading. But let's start over here on the right hand side. This is this week's candle. You can see that we were up 2.71% this week on the S&P 500, and this was the very first week that we ever closed above 4,100 on the S&P 500. We closed at 4128.76. So this market has been extremely resilient, and you can see that we've closed higher for the last 3 weeks in a row. Last week was the first week where we had ever closed above 4,000 on the S&P 500, and the week prior to that was the first time we'd ever closed above 3950, which is this blue line here. So we've made 3 weekly closing highs on the S&P 500, and this market has just shown an incredible amount of resilience, especially over the last 3 weeks. The next chart that we're going to look at is a daily candlestick chart of the S&P 500 that really just focuses on what has happened so far for calendar year 2021. Let's start on the right-hand side of the chart. Now, we know that this week was a very strong week in the market, and we gapped up at the open on Monday, the 5th of April. Tuesday was a slightly negative day, but you can see we had positive days on Wednesday, Thursday, and of course Friday. Today, we were up 77 basis points on the S&P 500 just today alone. And again, we closed at 4128.76. So this is another new all-time weekly and daily closing high on the S&P 500. Now, before we move on to the next chart, though, let's kind of take a look at what has happened over the last few weeks. Let's go back to Thursday, April 1st. Of course, on Friday the 2nd, the markets were closed for Good Friday. But on April 1st, Thursday, April 1st, you can see that this was the very first day that we had ever closed above 4,000 on the S&P 500. And for about 2 weeks prior to that, we had been running into overhead resistance at 39.75 on the S&P 500. You can see that there was a little bit of trading, right? The wicks on these candles were able to get above the 39.75 line. That's this blue line here. But we didn't have any daily closes above 39.75. We kept running into this overhead resistance area until finally on Thursday, April 1st, we were able to get up above that level and close successfully above 39.75 and above 4,000 for the first time in the entire history of the S&P 500. So if over the next few weeks or whatever the market rolls over, this would be one of the first areas to watch is this 4,000. You know, sometimes these round numbers become psychological support areas, but 4,000, of course, would be the very first area that we would want to watch if we start to see a pullback. But 39.75, there's going to be perhaps a little bit of support there if the market does roll over the next couple of weeks. So 39.75 may hold, you know, not a lot of support there, right? It only traded there for a couple of weeks, but the next level down would be around this 38.60 level. And you can see going back to January of this year, we had ran into some overhead resistance around this 38.60 area, pulled back from that, finally got above it in February, pulled back below it again. And then during the second week in March, we finally successfully got above and have been able to stay above the 38.60 level on a closing basis. We had a little bit of trading below 38.60 right here, as you can see, but we have successfully closed above this 38.60 level since the second week in March. So just to recap here, 39.75 and 38.60 are the short-term support levels below where we are currently trading if the market does pull back anytime soon. And of course, this is when you're looking at a daily chart. Sometimes on the weekly charts, the numbers are slightly different, but just keep in mind on a daily chart, the short-term support levels below where we're trading, 39.75 and 38.60. The next chart that we're going to look at is a weekly candlestick chart of the S&P 500 that goes back to the beginning of 2020. The green line is the 40-week moving average. Of course, that is equivalent to the 200-day moving average on a daily chart. And where we closed this week, the S&P 500 is now 14.45% above its 40-week moving average. So if we roll over anytime soon and head down towards that 40-week moving average, that gives you an idea of how far we would pull back to reach that 40-week moving average. And we, of course, have now had 3 positive weeks in a row on the S&P 500. The reason that is significant is the last time that happened was in September and October of 2020. As you see right here, it started this 3-week positive run. The last one we have had up until this last 3 weeks started in September and overlapped into October of 2020. And after that, we had 2 negative weeks in a row. Now, since then, we've only been able to stitch together at most 2 positive weeks in a row on the S&P 500. And so even though it's been super bullish, right, and we've continued to make a lot of new highs, all-time highs in the S&P 500, I think this is going to come as somewhat of a surprise to most people. The fact that the last time we had 3 positive weeks in a row was clear back in September and October of 2020. So, the question becomes, can we get a 4th positive week next week out of the S&P 500? Or like last time this happened, right, where we had 3 positive weeks in a row, will we roll over and be negative for at least 1 to 2 weeks in the S&P 500? Nobody knows for sure, guys, but this is just the way the markets work. I just wanted to point that out. So just be prepared, right? We can't be positive every single week in the S&P 500. It's impossible, right? And we've had months, right? Many, many months here where we've only had 2 positive weeks negative, 2 positive weeks negative. So be prepared for some type of a pullback within the next couple of weeks, because it would only be natural and normal. Market risk is the single biggest risk most equity investors face. Would you like to understand the level of risk in the market through all market phases? And would you like information that can help you stay in sync with the market through all market phases? Our proprietary model can help you do just that. Watch the balance of this video to learn more. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's 2 major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors. And what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors. And what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how simple market signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February, and then of course the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how simple market signals could have helped you during that time. With simple market signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an emailed newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule. And the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition. So whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least one or two emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this, because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly emailed newsletter, which goes out on the weekends, that will include all of the content that we just talked about. Plus, you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.